Good afternoon, everybody. Welcome back to Markets for Millennials and the weekly market wrap for the week of October the 11th through October 15th. We'll try to do a quick update today. First, looking at the DXY. As you can see, the DXY is well within the range that I discussed in my previous video. I don't have it pulled up. I'm not going to take the time to look at it, but obviously, I drew this circle saying that I would not be surprised to see the DXY stay in this range. So as I'm looking at this right now, I did a couple of different things. I went on a smaller time frame and I checked to see if what we were doing was building a wedge or if we were building a flag uh, of some sort or some kind of pennant. What I'm interested in looking at right here, let me darken this line out so that it's not in the way. What I'm interested in here is if I take this and I clone it, will this show market symmetry? And it kind of does. I think you could reasonably, put it somewhere right here and say that the market is respecting it. Whatever the case may be, we have a consolidation right here, which is above my trend line that I created a few weeks ago, but is below what I said previously was the key resistance level to watch horizontally, which is at approximately 94.70. Because a move above that, again, we've been in this sideways range between 94.70 and 89.30ish for a long time, ever since July of 2020. And so the fact that we're consolidating below this level, sometimes that means that once we that is preparing to price is preparing to actually move. Let's see here. Price is actually preparing to move above, to break above, retest, and then resume out. Obviously, it doesn't mean that the angle is going to be like that, but after the longer a consolidation, obviously, the more that the market tends to move, the more that price tends to move in the expansion phase. So that's something that I'm looking at on the DXY. DXY is not moving anywhere interesting. It's been in this range, obviously, for a little over 2 weeks now. Let's see, it was September 29th. We broke into kind of this range, and we've been consolidating. So um, I would be expecting personally more of the same. I could see us staying in here for another week or possibly 2 weeks. Um, Going into I believe there's a Fed meeting in November, so early November, and so I could totally see price staying within this range until that point, and perhaps the week of the Fed meeting, you would then see the dollar um, index start to move either to the downside or to the upside in anticipation of what's going to come out of the Fed meeting. I know a lot of people are expecting a taper to begin. A lot of people are wondering if where equities are going to be, if that's going to force the Fed's hand or not. So what I could totally see happening is consolidating for a week or two, and then as we get closer into towards the Fed meeting, we get some price movement ahead of the meeting. So that's going to be something I'm watching for. Let's take a look at yield since we're talking about the dollar. I talked about this previously. Even though yields broke out from this flag sort of formation, which started again right just in this range, and then I've since cloned the lines to clone the lines down. So we did get right here on the 28th, 29th, and 30th, we did get wicks into that line, failed to get above it, broke down, and then actually did come up. And this to me looks like, you know, uh, looks like something similar to what we saw last week at the tail end of the week and into the early part of this week where we got that close above this line. So we are making a higher high and a higher low so far. And so again, the proving ground is going to be right here next to this yellow line I've got up here because as I've said many, many times, we have these long-term descending trend lines that go back to literally to the 80s. Um, and so this always happens every time I pull this chart up. But anyway, so I'll be looking for that, looking for this to, sorry, I'm trying to get this figured out here. I don't know why it does that. But anyway, there we go. Um, I'm going to be looking for price to come up over the next few weeks into this trend line, and I make no prediction one way or another. Like, I lean towards getting rejected and resuming back down here. I just can't imagine yields going up past 175. Maybe if it did go up, if it did break to the upside, maybe we would get it close to the 2 range. But I just can't imagine yields going up that high without it causing a significant market correction. And so I don't see that happening. And if that did happen, the Fed would be, I think, forced to respond. Um, and so, but again, what I think is interesting is to note some similarity in price move in this area, uh, starting to take shape right around here. So price can move that fast if the market is anticipating a change in policy or with inflation expectations. So something to watch out for. Quick look at the equities. We have had a breakout of this important trend line, this line of repair, both on the S&P and on the NASDAQ. Not quite as decisive on the NASDAQ as it is on the S&P, but what we're going to be looking for on both of these is for price to come back down and retest that. That would be, if it did that, that would be the best place to take a long position, whether it be if you're actually trading futures or if you're buying index ETFs, long positions on index ETFs and things like that. The same thing you could see is true on the NASDAQ as well. You want to wait for this to come down and retest, right? You get that place right there, and you place your stop loss either there or there, and that's a pretty safe trade to take. But you want to wait for that. You don't want to chase this, and you want to make sure you set your stop loss appropriately. Um, Zooming out, like equities again, as bullish as ever. It looks to me like if we're looking at the Nasdaq here, it looks like it's going to do the same thing that it did in November 2020, March 2021, May and April of 2021, and it looks like the same thing is going to happen now. Um, Unless something changes in the backdrop with the Fed policy and all that, I can't imagine that price is going to do anything different. Um, on the S&P, again, looking for that retest. The the levels to watch are not necessarily the same as they are not as clean on the Nasdaq because my trend line here was a little bit more shallow and was making a wedge. So I'm not highlighting that. I think it's just going to be more of paying attention to maybe perhaps this spot right here, this sort of confluence of a horizontal level plus the descending trend line. Something to watch for. I'm going to get rid of this line. We did make a higher low and a series of higher highs. So we did make a higher high than our September 24 and 25 levels. So that looks good, but again, want to be waiting for the retest for a trade. If this gets away from you, or from us, I should say, I mean, price could continue to go up before coming down for a retest. Again, like you don't want to chase that because you don't know when the downside price action is coming. It could come at any time. So it's better to just stay on the sidelines than to take unnecessary risk. On the Dow, it's a little bit different. It's interesting to think about how to interpret this because my original trend line, I mean, like where would you put it? If you would you put it, let me adjust this a little bit. Would you put it there? In that case, it's like, well, okay, we had a breakout and a retest, or would you put it here? In which case, maybe we had a breakout and a retest if we want to do it right there. It's just not really clean other than to say that we are, making a higher high on the Dow than we had here, here, and here. So that looks good, but I think the line of repair, the real line of repair, is going to be right here. That's what I'm going to be watching for. I'm going to try to get rid of this. It's kind of in the way. That's going to be what I'm watching for. Question is, when the Dow gets to it, or will it get to it? And if it does, will it break through and get a successful retest and resumption and back into new all-time highs, or will it not? Um, and then finally, the Russell, as far as equities are concerned, it's more of the same. I mean, I feel like, again, maybe it's annoying. I talk about this all the time. The Russell has been in the same trading range this entire time. And so I did something. I'm gonna see if I can do this. If I can do this fast enough here. Let me turn this into a line. What I'm going to try to do is I'm going to try to add. Oh, I'm going to try to add in some of the other indexes here. Let's see what I got. Sure if I got this correctly. What's interesting though is if you go back to the March low, again putting in our all of our trend lines. I know I have two blue trend lines in there. It kind of looks messy, so I'm sorry. But what's interesting is if you follow the white line, you see the Russell underperforming. That the Russell is the white line is the one that I'm on right now. Just looking at the Russell, you see the underperformance of the Russell, and then once you get to right before the November election, the Russell really takes off and outperforms, right, until we get into early February, where the Russell has been sideways since then. It's just really interesting getting this look at all of the indices, because what this shows you is back to something that I said previously. Is the Russell going to eventually break out? And the reason it has not shared in the price movement like the other indexes is that because the it moved way too fast. It like overtook the performance of the other indices. And then does that mean, like, if we kind of draw this, oh whoops, that's really bad looking. And then if we were to it's not going to work for me. That's too bad. Um, does that mean that price is eventually going to break this consolidation and move up, and then all of the indices are going to move up together? Or is it the other story that I shared, which is, or the other possibility, which is that the Russell is going to go sideways until the other equity indices get a correction, um, get a correction, 10 to 15, maybe 20%. And the jury's still out on that, and I'm not willing to make any sort of full-on judgments. I'm just sharing that each of those is a possibility. So that's something I'm going to be looking out for. Take a look at gold and silver. Gold just continuing to be not attractive to me. Um, it looked like we were going to get, so I have, if I just pull back, I have these descending trend lines which have been cloned multiple times. I've been using them a whole bunch. If you see any of my videos from earlier this year, especially the first quarter of 2020 or into the second quarter of 2020, I talked a lot about what my gold chart was looking like. Cloned the trend line, and look at what we've got here. It was resistance, resistance. And then I thought, and I've tweeted about it, that gold was getting ready to come up and test it. And then it actually did get a close above it. And then today, just a really bad 1.5% down day. What's funny is I hadn't changed the color of this line to be green because I hadn't really paid as much attention to the chart, because only over the last couple of days did it get above that line. I didn't even have to change it because once again we sold back down below. And so gold is still continuing to not inspire. But silver, on the other hand, actually, according to our trend line repair that I have here, silver actually did technically get a retest and then closed above the line. So silver looks good right now. At least, I mean, from the standpoint of the line of repair, let me clarify. I don't think that silver is attractive to me for a trade right now, because silver is at the lower end of this trading range right here. Um, and I've said this before, like, I'm not excited about silver going to new all-time highs or really going anywhere of significance until we get above 2688. But if you're looking at the line of repair here, this is the spot to take a trade, quite honestly. It's one of those situations where if you are keeping rules-based TA, as the thing that dictates whether or not you take trades. I mean, like when you get a breakout and a retest, this is the spot, right? So you set your trade for the top, for the high of that price bar. And if you get a resumption above, then your trade is activated and your stop loss is right down here. That's a pretty safe trade, and so you got to be willing, like if you're going to take one of the trades, you got to be willing to take every trade. Because if you think about what this would have looked like, if you took a trade, if you were trying to take a trade over here, your stop loss is down here, well, you got stopped out. So then you got to make sure you take it again, because, and again, this isn't exactly right, because obviously according to my trend line, none of these have broken out. But I mean, if you were to, you could make this trend line, I gotta draw that out a little bit. You could make that trend line, you know, you could make this trend line, and then you'd have gotten the breakout here, and so on. So you just have to be willing to be flexible with those things. But anyway, that's to the point. The point being that this is actually a pretty decent trade to make. Again, setting your order to activate if price hits that level and setting your stop loss below the low of this candle right here. To me, that's pretty good risk reward if you think about it. Like let's look at what happens, because eventually silver's got to go somewhere, and hopefully to the upside. I mean, look at like where that line is. I mean, we haven't gone below that for a long time. And if you think about, even if we made up half of this trading range from that spot, I mean, that's a 10% move at minimum. And then if you get the whole trade range, that's 26%. So that's pretty good risk reward, if you ask me. Obviously, not financial advice, I guess, kind of, um, but anyway, that's just the type of principles that you want to be sticking to. You want to take trades that have a higher probability of success. That is the CTM method. Bitcoin, doing Bitcoin things. I tweeted about this earlier. I'm not going to darken all the lines. You can kind of see the levels on the right side here. We have all sorts of like just this mass basically in this whole area right here. We've got this mass of closes, daily and weekly and monthly, that are in the way, that are providing potential resistance. We did pop above the 8th of 9. I counted 9 significant levels of resistance that we have since the low have come above. And we popped into the 8th one, but it looks like, unless something changes in the last 40 minutes of the trading day, it looks like Bitcoin's going to close below it. And we only have one more before all-time highs. It's crazy to think we're less than $5,000 away. Actually, if I look at this, we're less than $4,000 away from all-time highs. Just crazy to think about, just thinking about all where we've been at over the course of the cycle, especially since the mid-cycle shakeout and going into first wave. I mean, once we break all-time highs, people are going to be asking the question, is now a good time to buy Bitcoin? And a lot of people that wrote Bitcoin off are going to start FOMOing in. Price action going into the last 45 to 60 days of the cycle is going to be electric. One thing to watch out for on Bitcoin, because again, the chart looks pretty good. What you do here is you take a look at the price action from this consolidation. So I'm going to take this spot right here. Let me get my correct line. And you're going to do something like this. By the way, this wick, since I'm on the Bitstamp chart, only the Bitstamp chart recognized this big wick down. I'm not sure why, but that's just the way it was. So you draw a chart or a trend line like that. You just kind of watch this and you just kind of see, does price stay above it? And once price breaks this line, then that would be where I would assume that Bitcoin's going to come back for consolidation before going into the liftoff and parabolic move into the cycle peak. So that's my read on that. So just got to be aware when price moves like this. I mean, it is Bitcoin. I mean, Bitcoin does that. You just gotta. This is where it's so important to have that laser focus, so that you can be apprised of what Bitcoin is doing and what the moves look like. So that's kind of where things are at on Bitcoin. I'm going to get rid of this extension. I'm going to do this right there, just like, let's see, we'll do that. Okay, so that's perfect for me. Bitcoin looking good. And just again, shout out to CTM because we in CTM, we have held strong. We've kept the same laser focus, the same mindset all throughout, and we haven't wavered. Most of us haven't wavered. And so feels pretty good to see price doing this after all the things that we've gone through. The last thing I want to take a look at before I get off here is the growth to value. I've looked at this occasionally. I'm going to make this a line so it's easier to see. It's interesting. We had a good long period of time from September 2020 into mid 2021 where we had value outperforming growth. Then we had a growth breakout. And then what's interesting is we've made we had this higher high right here from this spot. But then now we're making a lower low. And so it looks like, because of the way that this line is looking, it looks like, if I move this back over a bit, that we're getting this to curl over and go back down towards value. That's what I'm going to be looking for a week from now to see what happens. Do we is this going to be kind of our lower high, even lower than this spot? And then are we going to make another lower low? I think that's something to watch out for because you're going to see that sector rotation away from the growth names and into the value names. And I think that will, uh, you know, be more easily distinguishable as a reflection of what's going on in the equity market. So the thing I'll be looking for is which of the equity indices is going to outperform during this period of time over the next, month or two going into the holiday season. Um, so that's something I'm going to be watching for. And that is going to be the end of our weekly wrap for today. So if you appreciated this and enjoyed the content, go ahead and subscribe if you haven't already. Share this with somebody who you think needs a good look at the markets overall. And again, thank you for watching, and I hope you have a great weekend, and I'll see you next time.